Going on, guys? Today we'll be talking about daily biases and the first thing that you should really do when starting to trade. Okay. Now, every time frame that's lower than a daily time frame is going to be hostage to whatever the day wants to do in the daily time frame. And what I mean by that is, for example, let's say on the daily time frame, we come here. Let's say we're very bullish. Okay, let's say see this big green bull bar right here. If you go back to, let's say, a time frame that's not a daily chart, you're going to have temporary correction phases like this. Now, obviously, it's not the same day. However, I just want to show you guys as an example. Now, it's very easy to come in here and be like, okay, let me try to get a nice short. Let's say maybe you draw your 100% right there. You draw your 0 here, pull back into the 61.8, and you're like, okay, let's take a short here to the bottom. Now, the problem with this is if you have a bullish daily candle, you have a bullish daily bias, all your shorts are going to be a lot less reward. And also, you're going to have a higher losing percentage. Okay, so not only do you get less reward, but you also have a lower win rate. Right? So those are two reasons why you want to make sure that you always find the daily bias and find trades that are going to happen, that are much bigger and higher probability based off the daily. So if you take a look here on the daily chart, let's just go back to a specific time frame. Okay. Now the market cycle is breakout, channel, and then range. Okay. You can see here we have a breakout of a bar, which leads to a channel, which then leads to these are typically the three market cycles that will happen, when you're trading, which is why when you get to the top of a bull channel, you start to get a lot of choppiness, which we're starting to get here on these lower time frames now. But if we go back, let's just, start here. First thing that we have is on the daily chart, we have this first breakout of a leg. Now, if you see a breakout of this leg, what you want to do is you want to start to go long. Above the 20 EMA, very bullish bars, you'd be very, very smart to go long on the 1, 2, 3, even 5-minute chart and take off half of your position, maybe at 2R, and then set your other half of your position. Maybe you hold it until close. Why? Because if you look at these daily charts, look how bullish they are. Right? And, holding half your position till the close or to a specific target gives you the opportunity to get a lot of reward on a trade. Because once you take half that position off, move to break even, it's now a free trade. You now profited off the trade. Now you're trying to swing for the fences on the other half based off the daily bullish bias. Now, if we take a look here, we have this breakout after 2 legs down that meets a measured move to the downside, right? You can see here we had a channel forming on the daily chart that led to an overshoot, 2 legs down, and now we're expecting a new high. So if we're above the EMA, very bullish after 2 legs down, these are very important areas to realize, hey, it's not a bad idea to make today a swing trading day, right? We're going to take 2R, maybe even 3, 4R today because of how bullish the daily bias is, right? Then we get another breakout. We now get another touch point. We get another touch point. Now we're starting to see that we have the spike in channel forming here, right? Breakout leads to a channel. Now you're starting to see you have a touch point down here, touch point down here, touch point over here, touch point over here. This is all signs of bullish daily bias. And when we get up into these levels here, right? These levels here, you're probably going to have an end of the correction phase, right? And you're going to start to move to the downside here. That's exactly what happens here, right? So coming in and seeing, hey, we rejected off this trend line, right? Look for longs on the 5-minute chart or the 1-minute chart or 2,000 tick chart. Right? When we're up here, you want to start to say, hey, today we should most likely start looking for shorts, or we might expect some choppiness before pushing to the downside. Okay. Then we get a break of a channel. Typically we get 2 legs down. In this example here, we didn't get 2 legs down. No, we get slightly above the EMA before making a bear bar, but we do get above the 20 EMA. We close pretty high here. So, after seeing this candle here, you might think to yourself, maybe we'll get 2 legs up here before potentially getting, a second leg down. And you know that there's a measured move here, right? So if you come into the daily chart and you're here, right, the distance between this candle and this candle is, this is NQ, is 209 points. So if you're taking trades on these days, scalping out at 2R, maybe scalping out another portion of your contract at 3R, and then leaving the rest at 100 points, and then just leaving for the day, coming back and seeing what a quarter of your contracts did. Right? This is how we can get those big R trades, and be a part of these bigger moves. Now, obviously you can see the counter trend trades are a lot smaller, but even still, when we get 1 leg pullback, 2 legs down, that you can see happens right here. Knowing that we're trying to make 2 legs down on the daily chart, now when you go to the 2000 tick chart, okay, we have 2 legs down, 2 bullish candles up, another red bar. Okay, we should probably be looking to go short. It looks like this day was choppy, but the next day, we have a measured move to be met down here. Now on the smaller time frames, you should be looking to go short, targeting these areas here. Again, this is how you get these really, really big trades in these big swing positions. Now we go first leg pullback, 2 legs. We can see up here we do get a pullback, but it fails. Right? And then we start to go up. Right? And we're expecting new highs here. Right? We make the new high. We get another pullback. Now we have 1, 2, 3 touch points. So what do? We draw our channels here. This. Right? And now, we're expecting this bold trend to continue, right? We get an overshoot here on the daily chart. Once you see this overshoot and this bear candle, well, on the smaller time frames, you should probably look to go short, right? Because we had an overshoot of the channel. Typically, it will retest the EMA or retest the opposing side of the channel. It doesn't. So we end up getting this bullish push up here, which can mean a few things. It can mean, the trend channel is wider, which we widen here. And again, we start to reach the top of this channel here, and we get this very, very big, bear bar here. It does look like we come up a little bit to about 60% of this bear bar here before we're tracing down. But again, when you start to see these bear bars underneath the channels, hey, we should probably be looking to go short on the smaller time frame. Again, you see a bull bar. This bull bar pulls up. Then we get a bearish reversal bar right after it. Kind of a dojiest, but it's not the best. But still, right? Why do we got a bear bar at the low, a bull bar that's immediately get a bear bar right after it, and then this bullish bar continuation, right? That's signs that the market on the daily chart wants to go lower, right? And if you look here, it looks like this is actually 2 legs down to a measured move. When you catch this on the daily chart, hey, let's say, we're at this point here in lower time frames, you can say to yourself, hey, we most likely want to go down to the 1800s, right? 1872. Right now we're at 19,382. So we know we're probably going to get a 1,000-point drop on the daily chart. What does that mean? Well, when you're in the lower time frames, this is a good opportunity to take 25, 30, 50% of your position off at 2R and swing trade the rest of your position, right? So for example, if we look at current times, the first thing that I see here is we get on the daily chart, 1 leg pullback, 2 legs down, and then we get a push high, another leg up. Now, typically, you may get 1 leg pullback, 2 legs down, which is kind of what we get here. 2 attempts to go short, they fail, and then we get another leg pushing up here. Okay, so there's a chance that we come up to these levels and make new all-time highs on the NASDAQ. However, you also have to pay attention to this. You also have to pay attention to that we're also kind of in a range here. right? You also have to be aware of this, but we are closing outside of this range. So this could be a successful breakout out of the range. One leg pull back, two legs down to the bottom of the range. We get one leg pull back. We retest the bottom of this range twice before pushing to the top side. So on the daily chart, we can have a range breakout, right? Or what we can have is turns into a failed breakout on the daily chart, which means that we would most likely test the bottom of the range again. But obviously right now, we're looking bullish, right? We have this nice channel working up. You can see here we have touch points here. Nice channel that fits decently well here. Now, you might not want to go short until we break this channel here, right? You should have a long bias, right? Wait for, prices to come back to this level, and if you're seeing prices come down, open up your daily chart and see how close we are to this trend line. Obviously, you can see we rejected once, twice, three. We might come back, reject a fourth time, and have a successful breakout. Or the range will win. So what ends up happening is we break this channel. We break this channel and we just return to the downside, and it actually turns into a failed breakout. Right? So at this point, we're either going to have a range breakout or we're going to have a failed breakout in which prices are going to retest the bottom. If we get a range breakout, well, we're most likely going to want new highs and a continuation of this second leg, right? Because if you take a look here, we've clearly had a range working up. Right, let me make this green so we can easily see it. Clearly have the range working up, two legs down, and now we're getting our two attempts to a new high. If this fails, guess what? It's probably going to be a failed breakout bottom of the range. If it doesn't fail, again, where we're looking to go is at least new highs, right? We can put this on all charts. So now when we go back to our lower time frame charts, actually NASDAQ here, we can see that we have this big target area here. And if we draw our channels, if you really widen up this channel, right, we might potentially have this channel working up. It might actually be a wider channel than we think based off of where prices want to go. We might have at some point two legs down, right, before attempting to make new highs. Or, we actually might just get, another spike. Maybe we have one leg here, pull back, and another leg. Maybe we want to reach, these levels around here. But this is what you want to keep an eye on, right? Because, if you just come in here, it's very easy to be like, man, look at, it's starting to go sideways a little bit. This buying pressure is ending. But when you go to a daily chart, we're very bullish. Clearly, the past, month and a half, we've just been in this range, but, we've had two legs down, right? We have another attempt up, two failed attempts to go low after this first leg up. And then, we now have a potential second leg here, which would be a range breakout, right? So just keep an eye on this. The daily chart, it's very, very important. If you can successfully narrate and understand the logic behind what's happening to the daily chart, the lower time frames are so much easier to trade, right? I always say that, the daily time frame is where you want to create your understanding. The lower time frames is how you want to cheaply enter those bigger trades. Okay. So again, you can see this is the low. We have one push. And we might be potentially making a push here. However, based off this first leg, we do have a pullback. Now we do have another leg here that, did make this measured move here. So again, we want to see prices break out further above this range to confidently say we're going to make new highs, right? We might get a pullback to this channel before going up. We might get break 2 legs down, then maybe we get a new high, right? But either way, nobody knows until we see how, these candles close, how Sunday opens up, and then what the overnights were on Monday. But the overnights will tell the story. Either we're going to get a bunch of bearish bars, potentially retesting this trend channel or the bottom of this range, or we're going to get a bunch of, bull bars signaling that we're going to have, a breakout of this range, trying to make new highs. And again, we'll see that story on Sunday and we'll see that story on Monday. But this is how you create a daily bias, right? These, if we take a look here, we have these 2 legs down, right? Then we get this bar that closes on its top 1/3. Then we get kind of this doji bar, but then we get this big, bullish green breakout bar, right? We probably want to look for longs around these areas. Even on the 16th, yes, it closed kind of on its low, but we know that we probably want to at least retest the high after making 2 legs down after a trend channel. So we know even if we're trading around these areas here, that prices most likely want to come up to 22,000. And yeah, we're at 21,000, but we know prices probably want to go up at least 1,000, at least to make a new high, which would put us at 21,000 to 22,400. So we're talking about, a little over 1,000, 1,500 points. So we know there's going to be a big potential move here. And again, I'm not saying to swing it the entire time, but this can give you confidence in understanding the directionality of the market, but also knowing when you can get high levels of risk, not high levels of risk, high levels of reward, right? Because if you take a look here and you see this leg coming down here on the daily, well, you probably shouldn't be looking for longs, right? If you take a look here, I'll just draw some fibs here. See a leg come here, you see we bounce off the 6130, and then immediately you have bull bars, higher low, very bullish. Well, 9.9, 9.10, 9.11, this should tell you, okay, we're now switching to a bull market, right? 2 legs down. It kind of looks like 1 leg, but you can kind of see that we have a lot of bars coming to retest the EMA here that you can count as the second leg. Right, we get a breakout, spikes, prices spike down to the 6180. What happens after we get a breakout? Channel. So now we know, okay, we're probably forming a bull channel, right? Now, obviously, at this point, you might, have your levels here like this because you don't really know what everything else looks like. But you do know we're above the 20 EMA. You do know that we rejected off the 61.8, and now we are making a push to the upside. Okay, so this is how you use the daily bias to increase your win rate because you know where the market wants to go, but you also increase your reward. You now know when you can go for 3, 4, 5 hour trades, and that really, improves your trading results. When your average loser is $200, and then you get a market condition that allows your average winner to be $1,000, I mean that's a game changer, right? So you always come down to the daily chart, take a look, figure out what the daily bias is, mark your channels and your legs as if it was in smaller time frames, and then when you come down to your actual charts, your lower time frame charts, you can now put some of those higher time frame levels here because they're going to act like magnets, and we know, okay, prices probably want to make a new high, which is going to be this 22,400. So we at least potentially could have a 200 move to the upside. And again, that's $4,590. So again, if you see 2 legs down here, right? Let's say we see 2 legs down here, and you take a trade on a limit order here, and let's say you take 30, 40 points here, right? Your stop here is 20 points, right? You're expecting prices to retest this, so maybe you leave a contract on you, and you put it up here, and then you just relax. You just see how high prices rally, to retest these levels, right? Hopefully that was easy enough to understand about how to use higher time frames to create daily biases, and how to basically work from the top level all the way down to ensure that you're always on the right side. If you guys have any other questions, see you guys in the Discord.